I took this 1:16 put short trade in Banknifty, and today I'm going to tell you in this video how did I take this trade, why did I take this trade, and everything behind it. And I'm also going to tell you how can you take these types of trades with your own capital. So you guys, I'm Paris Krishnani and welcome back to the channel, and let's just start with the video without any further delay. So first of all, I'm going to show you guys my broker terminal so that you can verify basically that I've taken this trade. If you see, this is the 50,600 PE, and if you go into the details, you'll see that I've shorted this premium at 604 rupees and I bought it back at 159.3 rupees, right? And if you think that this is a fake site, it is not. If you see, this is trade.mstock.com, and this is basically the site that is the official site for mstock. And I'll also refresh this for you guys, so there is not really any sort of a problem. If I go into the watch list, portfolio, orders, right, if you see, there are also all these orders that are put today, right? And this is the order that I put to book my profits, right? So this is the position, and I hope you guys now are convinced that this is a real position. But now let's move on to how did I take this trade. Okay, so to understand that, first we need to set the context, right? This was 14th August, right? And if you see, there was one day of break over here, right? And now what happened is that on 14th August we had the CPI data from the US, right? And the CPI data came bullish. However, on 14th August, if you see and go and look at the FNO data, right, what positions did everybody have in the market? And if you see, the proprietary traders, they had made bearish positions in the market. Keep in mind, they had made bearish positions in the market. Now what happened on 16th August when we opened after the Independence Day holiday was that we opened with a very big gap up, right, somewhere near 50,100, from 49,000, you can say 750, all the way up to 50,100. Now what happened was these guys were now trapped. How did I say not trapped, but these guys were now against the markets, right? Because there was a good news in the market of the CPI data coming in, a good CPI data coming in from the US. That means now there is a bit of a fundamental change, but these guys are now trapped. But you need to understand one thing is that whenever these big institutions are on the wrong side of the market, they will not panic and exit their positions. Always keep this in mind. They will first bring the market in their favor a little bit, and then they will start exiting. And that is what exactly happened. If you see, at the opening, if you see, the market started to see a sell-off again. After the first two candles, the market again started to see a little bit of sell-off. Why so is because the pros or the big institutions will bring the market down. They will then start to exit their positions. They had made short positions in these 2 days over here, okay? And now if they want to exit their short positions, they will first bring the market down and then start to exit their short positions. Then that is what exactly happened. If you see, markets came back down, almost filled the gap. If you see, in futures, the market did fill the gap, but in spot, the gap was remaining. If you see, in futures, the markets exactly filled the gap, took support, started to move up, right? And in Banknifty also, if you see, markets didn't really fill the gap. There was a little bit of gap remaining, but you can say that the markets filled the gap and then started to move up. And what I was waiting for is a confirmation that yes, the trend has changed. And how do you get a confirmation is very simple. If you see, the market was making a lower low pattern over here, and what happened all of a sudden is that market could not make another low over here. However, it started to make a higher high pattern, right? And that is where I wanted to take an entry over here above this candle over here. If you see, above this pin bar candle that has been made, so I wanted to take an entry over there. However, I could not take an entry. But why did I want to take an entry at this candle itself? Why not over here? Why not in this candle? Why not in this candle? Why not in this candle, right? So the simple answer is I was waiting for a trap in the market. If you see, whenever this pin bar candle is made, it is assumed that this will be a reversal candle. So if previously there has been buying, it is assumed that this candle will be made. Now there will be a reversal. That means the market will start to move down from here. But what happened was the buyers were so strong that they didn't even make a wick in the next candle. If you see, from lower levels, there wasn't even a wick, and the buyers just started to buy as soon as the candle opened and started to move. And so I wanted to take a put short entry over here, right, over here itself, but I could not take that entry. I missed that entry. And so I decided to take my entry a little bit higher. Why did I do so? I am also going to explain to you guys, but I hope you guys understood why did I take an entry over here. Another thing is that a lot of people would have taken a short position in this sell-off that you see, right? Expecting that the market will again start to move down from it, because the previous trend was bearish in the market, and now everyone was expecting, okay, now also the market will start to move down. This is just, you can say, a pullback, which was in the form of a gap up, and now the market will start to move down. But these guys who would have taken a short trade over here, they would have also gotten trapped if the market would have started to move up. So I missed my entry over here, that is fine, but then I decided to take another entry over here, because if you see in this candle also there was no wick at all. So I decided to take my entry in this candle itself when I saw a lower, basically a higher high being formed in the 1 minute chart. Okay, so I take my entries in 1 minute chart also sometimes when the market has already moved up and you want small stop losses. Okay, when you want small stop losses, you can also use 1 minute chart. However, keep in mind that to master the 1 minute charts, it is a bit more hard to do so because there is a lot of noise. So I would not recommend, if you are starting off or if you don't have a lot of experience in the market with technical analysis, do not use 1 minute chart. Just do not start using 1 minute chart very early on. Observe in 1 minute chart and see how the price action is being. But since I have a lot of experience, I did take my positions in 1 minute chart and I kept my stop loss very small. Why did I keep my stop loss very small? Because if you see the markets, the way this very big candle has been made, right? I knew that if the markets have to move up from it, they will move up very fast. They will not take a lot of pullback, and so I can give a very small stop loss and I can ride this very good trend from here. Why did I say so? Is because, as I said, whenever somebody gets trapped or whenever there is a trap in the market will move up very fast. The market will move against them very fast, and you can say this was also a trap, as I explained to you guys. So I decided, let me take a put short trade over here and let me keep a stop loss very small, because I know that if this is a genuine breakout, if this is a genuine up move, the market will not give me very big pullback and it will continue to move up. And that is what exactly happened over here. If I open the premium chart and show you guys, over here is where I took my put short trade in that candle, and I kept my stop loss at 631 rupees itself. Okay, 632, you can say 631, but basically near 631. I took my put short at 604. I knew that if the market has to move very fast from here, it will move down very fast and it will not take a very big pullback, and that is what exactly happened. If you see, markets didn't take a pullback all the way up to, actually this is the wrong one. Yes, markets didn't take a pullback all the way up to 50,400, and after that did the market see some sort of a pullback / consolidation over here. So what I want you guys to understand is if you want a trade with very good risk to reward or a very small risk, find places where the buying will start to come in instantly or the selling will start to come in instantly. Basically find places where there will be a big move and the big move will happen very fast from there. Okay, so I discovered, not discovered, but I identified one of those places as over here. But since I could not take my trade over there, I decided I got another chance. However, it wasn't as good as it, but still it was worthwhile to take a trade over there also. So I knew that from that place, market might not take a very big pullback. It could have taken a very big pullback, but with experience, what you get to know is that in what type of situations what the market will do. In what type of candle formations will the market give a good pullback, or in what type of candle formations will the market continue to move without a pullback. Okay, so in this type of candle formation, I knew that the market will not give a very big pullback. That means I can give a very small stop loss and I can hold my positions. Okay, and that is what exactly happened. If you see, markets moved up and the premium closed at 350 rupees over here. If you see 323, you can say, yeah, 320 rupees over here. And then if you see, the next day market opened with a gap up, and actually what happened the next day was that market saw a slow sell off over here, not a very fast sell off, and that meant that the buyers were still strong. Why am I saying so is because if the sellers were very strong, they would have brought the market down at the same next day itself and closed it somewhere near 50,200, 100, and that is when I would have had to exit my positions, because now what I was expecting is that market would be bullish for a few days, but now the market has again seen sell off. That means my thesis, basically what I was expecting has gotten wrong, right? And the market is not going to move in that way. That means I need to exit my position fast. Okay, but still, if you see, the market saw slow sell off and the premium just closed 40 points higher than the previous day. If you see, the premium had closed somewhere near 330 for the first day, and the second day the premium closed somewhere near 370. So just 40 points higher, and then I decided, you know what, let me take my put short positions home, because the market hasn't really gotten very bearish. This is just a small sell off. And the second day, if you see, market opened flat, continued to move very fast, and that is where I booked my position. Now you will be like, why did you short 50,600p? Okay, you could have shorted 50,800, 51,000, you would have gotten more money. But what my rule is that I always short a put option which will be a little bit out of the money when my target gets hit. Okay, what do I mean by that is that now in this trade, when I saw that the market was moving up, I decided that my target was 50,800 in spot. So I will take a premium that when my target gets hit, that premium will be slightly out of the money. So when 50,800 comes, my premium should be slightly out of the money. Why? Because this will give me a good amount of theta decay also on my premium, right? Which means I'll get my profits a bit faster, or I'll get more profits. And so I decided to short 50,600 PE, which would be slightly out of the money, or a little bit out of the money, 200 points out of the money when my target gets hit of 50,800. Okay, and why did I stop till 150 rupees? Why did I not book my profits near 300? Is that whenever I take trades, I mostly wait for 80 to 75% profit. Basically, I capture 80 to 75% of the value of the premium that I'm shorting. So now I shorted 600, shorted this premium at 604 rupees, right? So I will wait until I at least get 80% of 604 rupees, right? So that means when the premium will come at 150 rupees, I will get 75% of the premium, and that is fine. So I always wait for 75 to 80% premium capture in the in the premium, right? So if that happens, I will wait till the market continues to move in my direction. However, if the market would have given me, let's say, a negative closing, I would have also exited my position before itself, okay, or before my target gets hit. So what I want you guys to understand is that don't look at the profits only, okay? A lot of people will now, I know, will write that, you know, not a very big deal, just 6,000 rupees profit, this, that. What you need to understand is the risk that I was taking to make that 6,000 rupees profit. My risk was of just 27 points. 27 points mean it is somewhere near 430 rupees. Near a risk of 430 rupees, I've made 6,000 rupees. So that is what you guys need to understand. It is not always about returns in absolute terms. It is also about how much risk you are taking. Because if you don't respect risk, the risk will also not respect you, and it will not be very good for your account health, or you can say capital's health. Okay, so risk is very, very important. Risk management is very, very important, and that is what you need to focus more on. Not just focus on making profits, right? Because a lot of people, they run behind making 1 times 2 times profit of their capital in a single day, okay, and that is not possible. But when you respect risk, that is when you start to make very good money with a very good risk management also. And so if you see, I took this trade with a 1:16 stop loss. If I usually take trades near 1:12, 1:13 also. Okay, that means even if I take 9 losing trades, the next trade that I will take, it will give me so much profit that all of my losses will get covered and I will be in profit. Okay, so that is what I want you guys to understand, is that don't always run behind profits only. Measure your risk, keep your risk in control and handle your risk. Try to minimize your risk first, then the returns will get maximized instantly, or not instantly but automatically, you can say. Okay, so risk management is one of those things that you need to focus on in making these types of trades. Okay, try to find places from where chances are that the market will move in your direction. Okay, and how will you get to know these places? It is always about experience. It is always about looking at the markets, coming every day, looking at the markets and trying to understand what is happening. Okay, it is always about learning new concepts and focusing on them. Okay, and try to make your own systems. How do you make your own systems? You take a few things from everybody's system and make your own system from there. Okay, you take someone's risk management, you take someone's quantity, you can say management, or you can say money management from someone else, you take risk management from someone else, you take strike selection from someone else, and there are many other ways. Okay, so you need to combine different things and different people's different things which are good about them, and you need to make your own system. That is what I did. This system involves a lot of things that are that I've discovered in the market and I've used to make it those systems. I've learned from other people who are in the market, who have told me that this is something that I do and this is a very good thing, and that is what I've implemented in this system, and I've made my own system where I can take these very good risk to reward trades and get a lot of profit. And even if the market goes against me for a few days, I can cover my losses in just one trade. So that is what I want you guys to understand and focus on. Don't focus on the profit so much, focus on the risk, and I will assure you that you can definitely make good amount of money if you do that. Okay, so I hope you guys understood how I took this trade and what was the psychology behind it and what was the thinking behind taking this trade. So yeah guys, that was it for this video, and thank you very much for watching till the end. I hope you guys learned something new from this video, and I hope you guys learned a new concept also, or a new way of trading from this video. But don't worry, I will bring many such videos where I analyze my trades and give you guys many insights with how I trade, with how you can trade, and how you can make money in a sustainable way. But yeah, that was it for this video, and I'll see you guys in another video. Bye bye.